History suggests that even a small bump during a major stock market downturn would be enough to rekindle the hype that helped drive the record-breaking run up in cryptocurrency prices in 2017. At the time, breathless ravings about the future impact of technology from the crypto experts and edu-finance thinkers helped spread the crypto gospel far and wide. The result was a buying frenzy that culminated in a spectacular crash in the winter of 2017-18. Back in the early days of Bitcoin, the prophecy claimed that a major crypto rise would precede the next stock market bust. Apart from being an unimportant artifact, this hypothesis is related to other pieces of crypto folk tales that many cryptocurrency believers consider to be basic truths. Most particularly, it comes directly from the belief that cryptocurrencies are a solid long-term investment that is certain to appreciate hell or high water over the time. Though crypto enthusiasts disagree about what this one true coin is, their shared belief that cryptocurrencies will experience long-term gains helped them to unite and prop up the prices. Taking a step back and diving deeper into global economics, let's see how the looming financial crisis would impact cryptocurrencies' adoption when they face the first financial crisis since their birth. But even before that, let's see the typical human behavior. A financial crisis is often associated with a panic or a bank run where investors sell off assets or withdraw money from savings accounts because they fear that the value of those assets will drop if they remain in a financial institution. It's human nature to all strive for more, and the capitalist nature of our economy is built in such a way that to facilitate this constant growth, more often than not, we keep piling on the debt. This happens more so during a euphoric market in which retail and institutions often overestimate their ability to pay back their loans. A market crash and subsequently a financial crisis occurs when piling on this debt is no longer sustainable and everything comes crumbling down like a house of cards. Historically, investors turn towards gold during recessed economy. Let's see if Bitcoin, often called digital gold, could be a strong contender. In case you may not know, Bitcoin shares a number of characteristics with gold, such as scarcity, durability, fungibility. In addition, Bitcoin has even better properties that gold doesn't. These include storage, security, portability, divisibility, method of payment, and finite supply. So what will happen to Bitcoin and other cryptocurrencies such as ORB in the next economic recession if it has to come? Although it does remain unclear as to whether or not investors would entreat Bitcoin like gold during any significant turbulence, some analysts are noting that the sheer amounts of bonds offering negative interest rates is reason enough for investors to convert to a decentralized option like Bitcoin and ORB. Research indicates that 27% of the bonds in the world offer investors a negative interest rate, which may elucidate the fact that a paradigm shift towards Bitcoin is needed. I am very much biased towards seeing Bitcoin thriving as the new gold standard during a recession. But why? I have my own theory. Bitcoin was invented to combat so many of the issues that we face with the current fiat financial system, and studies suggest that people are increasingly looking towards Bitcoin as a viable alternative to their own beleaguered currencies during times of crisis. As an example, as the Greek crisis unfolded, Bitcoin exchanges reported as people traded the cryptocurrency, price surge. The lion's share of the increase came from customers in Greece. The price of Bitcoin also rose significantly as the Greece crisis deepened, lending further to the idea of Bitcoin as a panic currency. I can easily see this happening with US dollars, but as I always say, only time will tell. Don't forget that our ORB token sale is running on LA Tokens Exchange. Thanks for watching. I'll see you in my next video.